this will pay off your mortgage. This will put you in a position to buy income-producing assets. This will enable you to always put food on the table, etc., because both of these are used across the entire spectrum of the global economy. I think we're at a top, and we've gotten previous indications that we could be near a top, and I do believe that. So those people that are rushing to buy real estate now, do you really think this is a good time? I mean, everybody's got to have a place to live. So as long as you have the ability to pay that debt off, that mortgage off, boom, in a moment's notice, you got to have a place to make your last stand. But for speculation, or because you think it's going to hold its value, I mean, do whatever you're comfortable with, but I wouldn't do it. And I did buy some real estate near a top for my bug out location. I had a specific purpose for that. But do I think I'm ever going to sell it? No, I'm going to pass it down from generation to generation. Stressed China builders face $2 billion bond bill this month. Evergrande units have payments due. You can look here, Asian developers in junk, US dollar junk debt. So 2/3 of China's top developers breached a red line on debt. And by the way, a lot of Chinese developers own property in the US. Just saying. And here's another piece. For those that think that real estate is a great investment right now. Well, over in Minneapolis, residents voted in the ability to put in rent control. They can only raise it 3% a year. Well, what if your costs are higher than that? You got a problem. With interest rates rising, this is significant. It looks like central banks are losing control of traders. And traders with all of the derivatives on top of interest rates and credit and all of that, like they did in Australia, they can overwhelm the central bank's ability to control the rates. When interest rates go down, the principal value goes up, and you can see the longer the maturity, the more the movement. But the reverse is also true. When interest rates go up, the bond principal in the marketplace goes down. Now, if you hold it to maturity, and presuming they don't default on it, you're going to get your $1,000 back. But between now and then, this is what happens to the principal value in the current marketplace of the bonds. So in yield curve control, if this is short term, this is intermediate term, and this is long term, what the Bank of Japan and the Bank of Australia attempted to do was, if the longer yields were going up, well, they would go in and they would buy a whole bunch of bonds to push that down. That's yield curve control, right? And it really is dependent upon the central banks holding the market's confidence in what they could do. So here we have the Australian Central Bank, who had vowed and vowed and vowed that if interest rates were rising, they would go in and buy as many bonds as they needed to keep those interest rates at their target level. So they had an opportunity to do that, and they backed out. Australia's central bank on Friday, really, this quote, Australia's central bank on Friday lost all control of the yield target key to its stimulus policy as bonds suffered their biggest shellacking in decades and markets howled for rate hikes as soon as April. Now, okay, I'm going to say a little something about that last part. Markets howled for rate hikes. Well, just hold on to that, because what they're really talking about is the traders' opportunity to make money off of the move in the yields. Do they really want rate hikes? No, they don't. Why? I'll show you again. We've talked about it a million times. It's because all of that debt is at nosebleed levels. And remember, okay, going back to this, right? This is short term, right? This is the overnight rate that most central banks control and say, this is what that rate is. But that you really think all of those funds, all of that hold these long bonds, want to see their principal go like that? Heck no. Right now that can happen, and if you're in a fund and you've got, 100 or 800 or however many bonds in there, and that happens to one of them, okay. So honestly, when they say they want yields to go up, frankly, that's garbage. And we'll get into that a little bit more. So this had an impact on a global basis, though. But they're hardly alone at being at odds with increasingly aggressive market pricing. What they're talking about is central banks against the traders. That's what they're talking about, right? And traders might have a better, I don't know. Do they have deeper pockets in the central banks? Or do you think it could just get too expensive? The ECB on Thursday tried to push back against market hawks, but with scant success as bond yields jumped across the continent. Okay, so I'm telling you, these are even in advanced economies where this battle is really heating up. This is critical. It's critical. It's critical. Many central banks are conceding that global inflationary pressures look likely to be more lasting than first thought, given supply bottlenecks and surging energy prices. And quite honestly, that's only two reasons. But the reality is all of that money that they're printing at these low interest rates have created a bubble economy. Is it really any wonder that real estate prices have been ridiculous? So it's not the mom and pops and the normal public that has created this real estate bubble, it's Wall Street. And this is really significant on a global basis because both here in the US as well as in China, real estate makes up about 30% of their gross domestic product. It's all the money that flows through their economy. So it's a really critical piece. And come on, does anybody doubt that it's a bubble mode? And does anybody really doubt that at some point that bubble's going to pop? And I'm sitting here saying that this could be it. Just like I'm sitting here saying, I don't know, this could be the start of the hyperinflation. We just have to pay attention. It's what it looks like to me. It's what it feels like to me.